Dan Niles of AlphaOne Capital Partners came on closing bell at the end of 2019. He gave us his top 5 picks for 2020. Leaning on the tech sector, as he so often does, he picked names like AMD, Disney, Facebook, Lumentum and Nvidia, with an average year-to-date performance of 60%. Let's bring Dan Niles in and find out exactly what he's picking for next year. But Dan, before we get to those picks for 2021, just give us your thinking of why you picked those 5 names. Great picks, by the way. The average return 60% if you'd held them throughout the year. I know you've traded in and out a bit, but what was your thinking this time last year for those names? And I guess you'd have to say that an element of that return was a bit of luck, given the sort of stay-at-home economy, which I guess you couldn't have predicted the extent of.
Yeah, I mean, you have luck and you have, problems as well, because for obviously Disney shutting down all their parks, movies wasn't great. And so you have sort of this combination. And I think the nice thing about last year is, especially for a name like Facebook, for example, it held in really well, even though we went through a recession, and obviously advertising drops quite a bit during a recession. But there was enough money going into the internet economy that their advertising revenues actually held in really well. So it was a great acid test, as I like to call it, for a lot of these names and how sturdy their business models were. And so that actually makes me feel pretty good about those names. And last year, the reason why we liked a lot of these names is we thought they were cheap. We thought they had good growth in front of them. And that turned out to be the case. And as you mentioned, or Sarah mentioned, I think in the lead-in, if you look at this year, our picks are actually, there's only about 1 tech name in there, and the rest of them are really outside that sector, where we think there's a lot better values to be found.
So your 5 picks this year: JP Morgan, the XLE Energy ETF, Magna International, Oracle, and GAN Limited. We'll go through those 5 names individually in a moment, but talk us through why that pivot away from tech towards cyclicals out of the core tech sector for a couple of the names, which is not typical for you.
Yeah, I mean, I think when you think about the markets, a lot of this comes down to a very big picture view we have, which is inflation really hasn't been in existence, arguably, for the last decade. And if you look at where prices are right now for a lot of different commodities, so you look at zinc or copper or nickel, they're up over 20% year to date in the middle of a recession. If you look at food pricing around things like wheat or corn, that's up 10% plus as well. And even high-priced items like homes are up, I think, 7% year to date, and used cars are up 17% year to date. Now, this hasn't shown up in the inflation numbers, but when you look at 10-year treasuries, they started the year at 1.9%. They're now at 0.9%. But I think if you see economies open up next year, which I firmly believe they will, it wouldn't surprise me to see 10-year treasuries go well above 2%, which most people aren't looking at right now. And so if you believe inflation's already here today, what happens when economies reopen, that changes your playbook on what you want to look at. And tech stocks like low interest rates because they're long duration assets, and without getting too geeky on it, DCF multiples like very low interest rates to discount those future growth. If that goes up, then those become a lot less attractive relative to names that benefit from higher rates like banks, for example.
Shepard Smith here. Thanks for watching CNBC on YouTube.